All right, wake it up, wake it up. It's the Blacksmith Podcast. And welcome everybody to our financially savvy Saturdays. Y'all already know what time it is. I am your host, Will B. That be me, TBP. And we are gonna jump right into it. I got a great show lined up for you today. We're gonna start with two reactions. Uh, and we're gonna do our health tip of the week. And then we are going to get into Robin Hood, The World is Flat, or The Earth is Flat. We are going to figure out what this is all about. And if we have time to do stock breakdowns, we are going to do that as well. I believe we can get to it all. Let's make it happen. Keep it locked right here. And as always, I don't sport Nike Tech either. This is my brand. What do you do with your 62? That is, I'll start with breaking that down. So, what that is that's a lesson in time management. So, everybody gets the same 168 hours a week. If I gave you 40 hours to work, the average work week is 40 hours. That leaves you 128. If I gave you 56 hours to sleep, that's 8 hours a night, 7 days a week. That leaves you with 72. And if I gave you 10 hours a week to do the three S's, those in the military know what I'm talking about. Shower, shave, commute to and from work 2 hours a day, Monday through Friday. That leaves you with a grand total of 62. And my question for you, put the camera on me, is what do you do at your 62? That is to say, what you do when you are not working, sleeping, commuting to and from work, getting ready to work or winding down from work, aka what do you do with your spare time? That is all that's separating you from greatness, being a millionaire, being a billionaire, being your best self, mental health, financial literacy, financial wealth. All of that is separating you from this guy on the left too. That is John Hope Bryant. That's Cuzzo right there. And that's his real name, John Hope Bryant. And that's all that's separating you from him. So without further ado, we are going to get in my video breakdown for you from him.
Right now.
Hold on.
But history does not feel historical when you're sitting in it. It just feels like another day. But that does not, you're sitting in a moment in history. Right now. But history does not feel historical when you're sitting in it. It just feels like another day.
Yep.
But that does not mean the moment is not historic. If you haven't heard a thing I've said, please hear this. With Dr. King sitting in the audience, we're about to start a whole initiative to bring bank accounts to young people all across this country. I want you to hear this. The move is about to go from the streets to the suites. This is the third Reconstruction. The first Reconstruction was freedom. Civil War. About 10 years is when it lasted. 1855, 1865.
Yeah.
The second Reconstruction, that was about trying to get from the fields, hopefully to the factories. Second Reconstruction, Civil Rights Movement, happened here in Atlanta. That was about access. That's about trying to cash that corporate check. Trying to go from the classroom, you're sitting in a moment in history.
All right, so John Hope Bryant, if you don't know him, he is 100 millionaire. I was gonna say deca millionaire. No, he's a 100 millionaire. This guy right here is fantastically wealthy, but it's not about his wealth that I want to talk about. I saw a video about him last week where he was being interviewed by somebody, and he told them that he was living out of his car, and he did it for a couple of years. What he would do is work odd hours and be working late till like 11 p.m. and then he would rush in, take a shower, clean up and all of that, go to his car, and then he would go to sleep in the parking garage. But he would put from the inside of the car, he wouldn't get out because he'd tip off the camera. So I guess he put the moon roof up and he put the cover on the car. He said from the inside. And he makes sure it covers the license plate. Why? Because he was 3 months behind on his vehicle. I can't remember what kind of vehicle he said it was. Range Rover came to mind, but that probably isn't correct. I know first response is usually the correct one, but in this case, I don't think it is. But I think it was an SUV. But they were looking for his vehicle, and so he put the cover on there. And you could say, that is that's not right. I had a car get repossessed before I joined the Navy. And I just left the car in the front yard because I thought it was the right thing to do. If they come get it, they come get it. I couldn't pay them. It's only right to let them get it back. But that was my mindset, right? And he hit his car. I don't blame him, and I'm sure he doesn't blame me. And it ended up working out for him. He was homeless for a couple of years, living out of his car and doing it like that. But a lot of people will only see that watch on his wrist. I almost said Rolex, but I don't know watches. I'm not a watch connoisseur. They will see that ring on his finger. They will see that suit. They will see, they will hear what he's saying. If he's got any kind of jewelry, especially if it's gaudy jewelry, like it's got diamonds and all that kind of stuff in it, bling blinging and stuff, that's what they'll notice. They'll notice what he pulled up in. They'll notice that he has a chauffeur. They notice he sits in the back and gets driven around. They don't know what it took to get there. He has written books and had them published. This guy right here, if you ask me, heart of gold, full of wisdom, and listen to what he said. He's trying to bring bank accounts to young people all over the country. He speaks about financial literacy a lot. The way I see him is like, this is probably me in 10, 20 years, because I love financial literacy as well, and I have a heart to help people. When I do this show, it is purely because I'm not getting paid for this. There's no sponsors. It's purely because I want to bring the same knowledge that I have to y'all. I found that in the military, I had tons of a lot of mentees, and I would have these conversations, and they're focused on professional growth. I would help them on personal growth, but like financial growth, they were all running on all cylinders. A lot of times on most of the cylinders they were running on were professional. Sometimes personal was jacked, but financial, they were in a dark room, didn't know what was around them, didn't know if they were at the edge of a cliff. Financials in the dark, right? And so I noticed that's a lot of help that people need. So that's why I'm always reacting to John Hope Bryant. Now, let us get to, I was hoping that video was going to be longer and he'd get to the third reconstruction. I was loving what he was saying, but it's always a good time listening to him. Let's quickly get to my man, Humphrey. What do you got for us today, Humphrey?
Amount in your bank account. The magic number is your emergency fund plus any short-term savings goals, and that's it. Never keep over this amount in your bank account. The magic number is your emergency fund plus any short-term savings goals, and that's it. Because every dollar above that is quietly costing you money for 3 reasons. So the first is that big balances make you spend more. Researchers actually tracked 400 grocery shoppers and found that those with bigger excess balances, they consistently overspent even when they walked in with a plan. Number 2 is inflation. So $50,000 in savings at 3% inflation loses $13,000 worth of purchasing power in 10 years. For example, in 2019, $50,000 could have bought you 5,800 Chipotle burritos, but today that's 4,100, so you lost 1,700 burritos by doing nothing. Number 3 is opportunity cost, because if you consistently sit on money, you're going to miss out on a lot of gains in the stock market. A friend of mine had $80,000 in cash waiting for the market to drop, but that was over 2 years ago, and since then the market is up 20%, and that means he lost out on $16,000 for trying to wait it out. So what you can do today is tally up 3 to 6 months of your emergency fund. You want to add short-term savings goals to that number, and then park that amount in a high yield account earning 3.5%. Any excess savings above that, you want to invest. Let me know in the comments how much you are keeping in your accounts and follow me for more. Never keep over this.
All right, let's go. Now we let it play once all the way through, but we're gonna react to it now because I want y'all to hear the and hopefully I don't get flagged for YouTube for that, for using somebody's content, because really, like, the law says you're not supposed to let it play all the way through. If they say something to me, then what I'll do is I'll stop letting it play all the way through once, and I'll just stop it and go over it as we get to it. But I find it's better listening to it once all the way through first. Now, he said never keep over this amount in your bank account. It looks like that's definitely a 2, and it looks like a number here and a number here with a comma there, 3 digits. There's a decimal here, and there's 2 digits here. So what I see is this is $200,000 or more. This looks like a 2, an 8, and a 4. And don't get me started on the rest of them, but the first three looks like $284,000. Um, and I could be wrong on that number, but that first number is definitely a 2, definitely a 2. And so, why the heck would you have that in a checking account? Why would you have $200,000 sitting in a checking account? And we're gonna get to it. I'm gonna show y'all the deflation of. I'm gonna show y'all the power, the buying power that inflation robs your money of when it's just sitting there. And I'm gonna show you the power and battling prowess of deflation. But we're gonna get to the rest of the video first.
This amount in your bank account. The magic number is your emergency fund plus any short-term savings goals, and that's it. Because every dollar above that is quietly costing you money for 3 reasons.
He's absolutely right about it costing you money and the 3 reasons he said, but let's hear it.
So the first is that big balances make you spend more. Researchers actually tracked 400 grocery shoppers and found that those with bigger excess balances, they consistently overspent even when they walked in with a plan. Number 2.
All right, so let's talk about that. So big balances in your bank account. So if you got thousands of dollars currently, constantly sitting in your checking account every single month, unless you are super disciplined, you're gonna end up spending it. And if you don't spend it, you'll spend more than you would if you saw $500, right? Why? Because your mind automatically goes to, we have money, so I can buy this. So you'll buy wants instead of needs. Do you need this pillow? Do you need this car? Do you need this hat? Do you need this shirt because it's cute? These socks because they're blue? Do you need this stuff? No. But what will happen is you will override needs. And this is why most people shouldn't have credit cards either. Because what they'll do is, if they have no discipline with their checking account, if they see money there, so they figure, oh, I'll just swipe and buy it because I've got money. They don't look at the budget. They don't see what bill is going to come out when and how much they're going to have left over for the month. They don't first do that. They'll see, if I don't have it in a checking account, I've got a credit card that still has some room on it. But you have to pay that money back with interest. And the thing you will not like is the payment. And it tells you it's not the creditor's fault. It's not the creditor's fault. You can't blame them. The interest rate was what it was when you got the card. They tell you if that interest rate creeps up. If they don't, it's your responsibility, because you should be logging in paying your bill every month. If it's on auto pay, you still should be checking it every month. You are in control. And if you give the control to them by not paying attention to it, it's not their fault. But you won't like the payment that comes with it. They tell you, if you make minimum payment, how long it takes to pay that off. That's what every credit card statement. Look at it. It's usually page 2, right? It'll tell you that, right? Maybe page 3, but it's on there. So overspending. He is absolutely right. When you see money there, you spend money. So that's why you don't want to see money.
2 is inflation. So $50,000 in savings at 3% inflation loses $13,000 worth of purchasing power in 10 years. For example, in 2019, $50,000 could have bought you 5,800 Chipotle burritos, but today that's 4,100. So you lost 1,700 burritos by doing nothing. Number 3.
All right, let's talk about number 2 here. He is exactly right. He said inflation. Now, we just spoke about this, but I keep talking about this over and over and over again. Inflation is powerful. Inflation is a power, but it is a power that typically works against you when it's talking about your personal finances. Inflation works against you. It is not gonna. Inflation doesn't just sit there. It doesn't. It doesn't. It won't. So inflation is typically 3% a year. And so now there are years where it can be more, but for a year on end, decade after decade, it averages about 3% a year. So understand this. If you wind up having $100 in your savings account January 1st, 2025, and you do nothing to it until January 1st, 2026, what's going to end up happening is you'll still have that $100 on paper, but it's going to spend the buying power of it. It's going to spend like $97. You want to know what will happen to 1,000? Add a zero. So if you had $1,000 there for a year, it's going to spend like 970. If you had 10,000, it's going to spend like 9,700. If you had 100,000, it's going to spend like 97,000. If you had 1,000,000, it's going to spend like $970,000. Don't believe me? Let's do the math. You had $1,000,000 and you just tucked it away like a good squirrel for the winter, but you did it all year, times 0.03, take that one away, equals $30,000. Now let's go minus 100,000, 10,000, 100,000, million equals $970,000. So that's just from 1 year of just sitting there and doing nothing. That's checking savings. And you might say, well, I don't care. If I'm a millionaire, I don't care. Yes, you do, because watch what's going to happen now. And if you don't care, it's your money. That's all I can say. I can't say you're stupid. I can't say you're naive. I can't say nothing except you're probably not financially literate, and it's your money. You either earned it, stole it, bought the right lottery ticket. It's your property. You do with it what you want. I'm just telling you the facts, and the facts don't care about your feelings. Doesn't matter. So now let's do 10 years worth of inflation. So now you got $1 million multiplied by 0.3, not 0.3, because it's not 3%, it's 30, right? Equals $300,000. Wow, that's a larger amount. Let's add these zeros up. Bamsies, 700,000. So that's what he's talking about. If you do it over the course of 10 years, that whole $1 million, you will need that entire $1 million now to equal only $700,000 of buying power. This stuff is real, folks, and it's because of two reasons. There's forced inflation. There's natural inflation and forced inflation. Natural inflation, we already know. Eggs, milk, gas, they go up over time, right? Bread, groceries, all those goods. And it goes off of supply and demand. The more demand you have, the less supply you have, the more you're going to have to pay, the more valuable it becomes. The less demand you have, the more supply you have, the less valuable it actually is. They can't give it away for free fast enough, right? But it all works as supply and demand. Now, if you look at forced inflation, I always tell people like this: get you a pitcher of Kool-Aid, sweet tea, coffee. I don't know what you make a pitcher of, right? I want you to put the right amount of sugar in it for you, the right amount of sweetness, right? You take a sip, you're like, yeah, that's how I like it, right? And you put the pitcher in the fridge to get cold. Only let's not take that pitcher and put it in the fridge to get cold. Go get a new porcelain tub. Nobody sat in it, bathed in it. It's totally clean. You just dump that sweet tea, Kool-Aid, or what have you, into that tub, right? As it is. And you fill the rest of the tub with water. I don't know how many gallons the average tub is. Let me see. So what you want to do, you fill the rest of the tub with water. How many gallons is the average tub? 40 to 70 gallons. So you make 1 gallon of sweet liquid and you put 39 gallons of unsweet liquid in it. Now, stir that sucker up just like you did when it was good to go. Now, if it was cherry Kool-Aid, can you taste the cherry? Can you taste any sugar in that sweet tea? Probably not. You know why? You just diluted it 39 parts water Actually, 39 parts water, 1 part Kool-Aid. Now, the Kool-Aid has water in it too, but get what I'm saying. It's more viscous and it's more of a syrup the way most people make it. So 39 parts water, 1 part syrup, you get water. That's what you're getting, right? So each scoop, each cup of that water, that now bathtub brew, tastes just like water. Are there some granules of sugar in each one? I'm sure it is, but you can't taste it. And that's how forced inflation works. The first $1 million that ever got created was worth $1 million, right? But when they printed the next $1 million, it was only worth that dollar. Its buying power was now cut in half. Now it's only worth 50 cents. So now you need $2 to equal what $1 could buy 10 years ago. That's how forced inflation works. Not $8 more million into the economy. Now you got $10 million. Your $1, now you need 10 to equal $1 back then. That's what forced inflation is like. So Humphrey's right. That's how you get inflation beating down your buying power, your dollar.
3 is opportunity cost, because if you consistently sit on money, you're going to miss out.
All right, number 3 is really simple. I'll go ahead and take it from here. Number 3, all he's saying is you're missing out on opportunities to invest. The stock market took a nosedive in 2022, right? And I said this before. The next time you look at a pair of Jordans, the average Jordans cost $200, right? The average Jordans cost $200. The next time you look at a pair of Jordans, think about missed opportunities, because he's talking about having money and just sitting on it. Now, I'm going to bring it full circle. You have money, but you're spending it on stupid stuff, liabilities, not assets, right? I'm not saying don't ever buy yourself a pair of shoes. If you need a pair of shoes, get them, right? But shoes is not something you should have an entire closet for. Shoes is not something you should have an entire room for. If you put that much value on what goes on your feet, you better be making money with your feet. Feet picks, I don't care what you do, but your feet better be making you money, because you're letting the things you walk on that get calloused and bunioned, and I'm just kidding, but they get calloused and they sweat, and you gotta, you're letting those things dictate the pace of your finances. What you put on them is that important? It's really not when you think about it. But anyway, the average pair of Jordans cost $200. And I said this before. The average price of Robinhood got down to $7.19 in 2022. So let's say if you'd have taken that $200 and you bought Robinhood, you could have bought 27.81, or let's just say 0.82 shares of Robinhood, right? 2025, Robinhood went up to $100 and maybe $30, but let's say it went up to 127. I know it did, but let's just say it was 127, right? Let me write down this 27.81, right? Because that's how many shares. So Robinhood went up that much, right? So let's say 127, but you bought it at 719, right? So that's $119.81 worth of equity you would have in each share. How many shares did you buy with $200? Multiplied by 27 times 81 equals, that is $3,331.91 from a $200 investment. Actually, if you really look at it, it's from a smart decision and from not making a dumb decision and buying a pair of Jordans that you don't need, right? It's good to treat yourself every once in a while, but every time you're treating yourself, understand, if you treat yourself more than you invest, you're actually disrespecting yourself, your future self. Because in 10 years, if you're 50 years old and you've got the same amount of money in your bank accounts now, your finances are struggling now, and you've been treating yourself all that time over those 10 years, you disrespected yourself. Your 40-year-old self disrespected your 50-year-old self. If your 50-year-old self could reach back in time right now with your spending habits and what you are buying and swiping and scrolling and all of that, would they hug you or slap your teeth out? They probably slap your teeth out and say, get it together. Stop wasting money on stuff you don't need. And that's what people do. So I said the average pair person has like, what was it, like 10 pair of Jordans? So watch this. Multiply this by 10. So next time you look in your closet and you see 10 pair of Jordans, that's not 10 pair of Jordans only. It's a missed opportunity to have earned $33,319.16 worth of wealth. Wealth because it is money that is invested. The end. That's what he's talking about. Having money just sitting around or spending it on dumb stuff. All right. We have concluded that segment, and we are now going to get to the health tip of the week. Now, this is going to sound funny, but this wasn't me. Y'all can see it came from Goo of the Go. So, health tip of the week is eat the rainbow. It says by adding at least one brightly colored fruit. Okay, it should have explained. Well, it is explained. I just wouldn't have used that terminology, albeit I am, yes, Google, pardon me. Yes. Don't you start. Don't you start, because I already know where you'll go with that. No, this is July's health tip of the week. Halfway through July. Maybe this was, I don't know. I can't even. Anyway, it's awkward for me seeing this and having to explain this, but I guess I'm making it more awkward. But here's the thing. Eat the rainbow. So add at least one brightly colored fruit or vegetable to every meal. So apples are red, oranges are orange, lemons are yellow, limes are green, cucumbers are green. What else? Dragon fruit is that fuchsia looking color. So it's saying add this stuff in. You know what I like? I like those peppers that come in the bag and they're yellow, red, and orange. They're sweet, like sweet peppers. Roses are blue. Uh, Roses are red. Violets are blue. Yes. Okay. So it says upgrade breakfast. Toss a handful of dark berries, blueberries or raspberries into your morning oats or smoothie. Now, Mrs. Bryant definitely does this. She will have Greek yogurt, and she will throw blueberries in there with almonds or something like that. And these almonds are not salted or sweetened, they're just almonds. She likes the crunch from the almonds, the sweetness from the blueberries. She's not much for a sweet tooth, but if she has sweets, she lets it come from fruit typically. But if she's gonna go sweet, don't give me the diet version. I'm gonna go all out, but I'm rarely gonna do that, right? So that's why she looks the way she looks, and I know how she looks. Y'all don't. Don't worry about it. Get your own Mrs. Bryant. I mean, your own Mrs. Whatever. Uh, Prioritize whole foods. Swap sugary midday drinks for fruit infused water. And aim to avoid heavily packaged ultra processed foods, which have been linked to various health risks. All right, folks, it's 2026. It's time for us to start looking at the nutritional facts of what we eat. And you can't really trust the companies to put it all on the packaging, because guess what? The FDA, allegedly, the FDA is in it for the money, right? So health is wealth. And if you want to be wealthy in the realm of healthy, then you better not eat all this prepackaged stuff that often. What are we talking about? We're talking about the corn dogs, the breakfast sausage on a stick with the bread over it. We're talking about hot pockets, hot pockets. We're talking about I guess that's all my mind can gin up. I guess that's all I've got. I don't eat that stuff much. Hot pockets I had quite a bit when I was younger. When I first got a job, I would buy those a lot. The sodium content's off the chain. Um, ooh, even the noodle cups, the ramen noodle cups, prepackaged, full of sodium. Look at it. And how many of y'all go and do strenuous activities, sustain running or walking on a stairmaster or hiking in the sun and stuff like that? Most of y'all ain't doing that, so you're not really sweating that salt out. So what is it doing to your body? That's what you got to start thinking. It's 2026. Ask ChatGPT, ask Gemini, ask any of these AIs out there about health and what it will do to your body if you eat this kind of thing, the level of carcinogens in it that will cause cancer, all kinds of stuff. It's time to get smart on that stuff. It's not because I'm 40 now that I'm thinking about it. I started thinking about it in my 20s. I stopped eating Hot Pockets a long time ago. Now, does that mean if I opened the freezer and saw a Hot Pocket there that I wouldn't want to partake of, especially if it was the Philly cheesesteak or the pizza one? No. Or the breakfast one, the ham and cheese, the ham, egg, and cheese or whatever. That's not saying that. I know if I open my freezer, a Hot Pocket would never be there. My wife doesn't buy those. And so there are corn dogs in there, though. It's not wrong to have a corn dog. Don't have it for breakfast, lunch, and dinner, and don't have three at once. Um, Anyway, enough of that. Double up on greens. Make sure you at least half your plate at lunch and dinner consists of colorful, nutrient dense produce. So I have an app called Mrs. Bryant. But I'm just kidding. My wife. She makes sure I eat like this. When I was living in a house with two other guys that I was working with in the Navy, we're splitting rent. All air traffic controllers, my good friends. I would be in the kitchen meal prepping and cooking. I would be putting pork chops in the oven, steaks, chicken, all that kind of stuff. I'd be cooking rice, getting green beans, getting corn. Yeah, people could argue corn has no nutritional value. Whatever. It's better than eating something else, right? So I would get shrimp. I would get you name it. I was cooking that stuff, and then I would part it out or section it out or meal prep as they call it now for the week. So maybe I would do Sunday, and I have Monday, Tuesday, Wednesday, and then I would cook again Thursday for the rest of the week, or cook again Wednesday for the rest of the week. Um, but that's what I would do, and that's how I maintain being healthy. I would go to the gym. I would make sure I go for runs, and I run in the sun too. In Florida, Jacksonville ain't no punk. You get it might be 90 degrees outside and 100% humidity. You're breathing in as much water as you could drink from the bottle. So, it's you got to do what you have to do to stay healthy. So double up on those greens. Get you some veggies. I don't like that green stuff. Well, you don't like cancer either. You don't like poor health. Believe me. Now, Mr. WhyInvest. I was gonna see if you wanted to jump in here. If you have your charts and stuff ready, if you wanted to mic up or whatnot. If you are ready, I will let you go right here. Yeah, I got to give you the 100 in the fire for this Google. Pardon me. I don't know what was happening. That wasn't me, man. It was me that looked it up, but you can see what I said. Health tip of the week. That wasn't me. All right, I don't know.
I'm trying to get my. All right, here we go. Trying to get my Discord open on my laptop.
Okay. Are you gonna screen share?
Yeah, I could do that.
It's up to you. If you do, let me know. I'll
I
pull it
have it
up.
open. Uh,
All right, so you
let's see.
got IBM for us, correct?
I got charts on IBM, BB, and BlackBerry and Nokia.
Okay, let me do this. Let me close Legends. Let's go to Robin of the Hood. And let me go to, let's go home and let's go to IBM. Ticker IBM. You know, I never knew what IBM stood for. Let's see. International Business Machines Corporation. Oh, look at that. The more you know. You know, the first time it was like a month or two ago. If you'll probably remember this. Remember a month or two ago, um, we looked at like automated processing data or something like that, and I was like, I never heard of this company before. And you were like, dude, that's AMD, and I'm like, oh shoot. So it's good to know what it
Yeah.
stands for as well.
Okay. So
If you want, while I'm getting ready, I can go through the weekly charts and all this kind of stuff. Oh, watch stream? Okay, hold on. Let's watch your stream here. Where? Now it gave me the option before. There it is. Watch stream. Bamsies. All right, let me see. How can I do this? Maybe I just make this full screen? Yeah, let's just make this full screen for now while we do your breakdown. I think it's on you now. If
okay.
you move your mouse, we should be able to see it. Yep, we can see it.
Okay. So the reason why IBM is down is because they had a revenue miss. They put out their earnings early just to get out the way because their revenue miss was they made only 17.2 billion
Mm-hmm.
and the guidance was for them to have like 17.9.
Not a huge
So
miss.
that's
I ain't mad at it, but yeah, that'll
yeah.
do it.
But Wall Street is looking for a reason to sell all this AI stuff. So
That's right.
that's why everything. I think that's why everything right now is selling off.
Yep.
Nokia and I mean not Nokia, but Nvidia and Micron and all those companies. I think that's why they're selling off because IBM gave the market a scare. Um, my my chart right here. This the blue and the pink is a visual range profile.
Okay.
So it just measures volume at certain prices. So this is a weekly chart. So each candlestick is a week. And then if you look on my chart,
Oh, you got a lot of weeks on there then.
oh wait, each candlestick is a week. So this is 1 week, this last candle,
What you got, about
2 weeks,
30
3 weeks.
weeks?
So it's about if you go back where I'm looking at this 200 as a support area, 200 and 180. This is back in 2024.
Oh, I see. It's at the bottom here. Let me put the mouse on it so y'all can follow along. So look, this September, November, here's 2025, here's 2026, here's 2027. So you can see this is months worth of data or years worth of
Yeah,
data.
yeah. So right now we just went right below the 200 EMA. Normally, when the stock goes below the 200 EMA, it can signal bearishness. So it's just a stock to keep your eye on. My support areas for IBM are 200 and 180. And then in the group chat, I don't know the other guy's name. He put 160. That's like very bearish. I think 160. If we break 200 and 180, then yeah, 160 is the next level. And I think that's probably the lowest it will go because that's where uh, the monthly 200 EMA is at. So it's could be a strong support. Shouldn't go below. And then plus, if you look right here, all this chop zone right here for the last. This is monthly candle, so this is like years. So right here from 2016 all the way until I can't see that until 2023, it stayed between $100 and $160. So
this is Corey. I thought this was him that posted for IBM. Yeah, go ahead. Sorry.
Yeah. So yeah, he gave like a very bearish outlook on IBM. I don't think it's necessary because they didn't miss terribly.
Yeah, they didn't.
Oh,
And that's important.
yeah.
Like if they missed the mark, they said 17 billion and they hit 5. Oh, be afraid. Be very afraid.
Yeah.
That's getting sold off like nobody's business.
So yeah, I would think right now, I mean, it's already on support, 215, 210 or whatever. There's support for it. That's why it hasn't broken down below it yet. It did tap, was at 204. Mm-hmm. Bounced off. So, but next week I'll look at it to see if it gets down to 200 and 180. Well, I would say 180. I would say 200. I think 200 should hold pretty strong.
There's a lot of support at 200 is what you're saying?
Say again?
There's a lot of support at 200?
Yes. Unless we get like more bearish information, because there are a lot of earnings next week.
Yep.
So if those companies have any flaws in their earnings, then this is going to go. All the stock's going to start to drop.
Yeah.
Plus, on top of that, we're back at war actually declared war this time with Iran. So
is that what happened? I thought I saw a message that said Congress said they made it illegal to declare war on Iran.
I haven't seen that one, but I mean that's true. Trump I think he mentioned to Congress that he said he's declaring war on Iran.
Yeah. Okay.
So
I hear what you're saying. I get the ins and outs on can he actually do that or not. I get what you're saying. And you know what? You'll have people derail the conversation. This is a financial conversation. You'll have people derail it, going too political. Well, actually, it says only Congress can declare war. Look, man, the skirmishes we've had with them the last couple months absolutely tanked the stock market. It drove oil prices through the roof. Like, so I get what you're saying. We're at war with them. Allegedly, got it. Moving on.
Yeah. So yeah, IBM. I will look for any bounces at 200. If we get more bad news, then if you like to do some swing puts on this, if we get below 200, then you could do swing puts below 200 to 180, or even calls bounce off of 200 back up to probably 215 would be short term. Some swings.
Can you define swings for us? Like what time period is that? Like I know it's options. It's either call or put, a bet that it's going to go up, go down. But what's the time period?
So the swings I would do like 3 weeks to a month. Okay. Or good swings, because stocks like IBM, they tend to move quickly.
Yeah.
So you don't really need, I mean, you can do if you want to be safe, 6 months out. But I would do like 3 weeks out or a month out, and that would suffice.
Okay. Sounds good.
SpaceX would have been a great leap.
Yeah, tell me about it. From 135 to what was it, 2 something?
I mean, if you did puts too, like from as soon as it broke down from $200, that was easy. I feel like that it just went straight down. There was no.
Yep. Looked like it didn't have a floor.
Yeah. So, and then now we're gonna go to BlackBerry.
BB, I think that's the ticker.
Yep. Pick it up. BlackBerry. So I have BlackBerry on I think I was looking at it on the daily. Yes.
Oh, there it is, right?
The daily. So if you look at the volume profile over here, the pink and the blue, right? We're sitting on support. So so support is where a lot of volume is at, is where you see the bigger the volume, the bigger the bars. And where you see the smaller the bars is where price can fall.
Okay.
So
Does
if you
it
look,
matter
if you
green
look to
or,
the right,
or red or the pink?
so yeah, like of course, red sellers, blue buyers.
Yep. There we go. Yep.
But if you look right here, if we lose $12, it's below. It's right now IBM is below its 50 day moving average
Mm-hmm.
EMA.
Yep.
So if we continue down and we lose $12, there's a big gap right here that it possibly could fall to.
Where's it at right now?
It's at 1250 right now.
1250. Okay.
So, and this is daily candle. So so from the bottom, it started in April. So from $4 in April, it ran up to $18 in July. So
So by this chart, it looks like there's a lot of support at 524. There's a lot of volume here.
yeah, yeah.
Oh, okay.
So, but you also got to take into account. So if you look right here to the right, you're
Mhm.
right. There's a lot of support. Will it get down there? I don't think it will. The only reason there's support there, if you at the look at the weekly
Mm-hmm.
at $5, price stayed here. This is
For a
where the point of
while.
control is. This white line is point of control. So meaning price lingered here for a very long time.
Yeah,
That's the
that's
average.
why. So you had a lot of buyers and sellers at that price. Okay.
Yeah. So if you look at it right here, price went up to $8, came back down to pretty much $5, went below the $2, but right back up to $8. So it has an average price of about $5. So
Mm. So for day
it
traders,
stayed there for a while.
that was a good one, huh?
So yeah. My target though, if it continues, if it drops below is the 200 EMA is on the daily, so 200 EMA is around right now it's around 860. I put 850. But as the days continue, this will move up. So this could change. It could probably be around most likely $9 will
Mm-hmm.
be the next support for BlackBerry. There's a gap right here. There's a huge gap.
I
So
see that.
it,
So that means it'll
it'll
rise
fall.
fast or fall fast, right?
It'll fall fast if we break below about $12, $11. It's going to drop to this $9 pretty fast.
Mm.
And it may not seem like a lot, but that is from where it is right now.
That's a steep fall.
That's a 30% drop.
Yeah, that's a steep fall. Especially if you're
Yes.
talking about you have like 100, 200, 300 shares. Oh, you ain't trying to lose 30%.
Yeah. So that's BlackBerry in a nutshell. BlackBerry's down pretty much because it's because all tech is down, and they're affected because Nvidia invested in them and other companies invested in them. So
Right.
they're going to be down because of sympathy play.
Yeah, that's true. That is very true. Okay.
Then lastly,
Uh-oh.
Nokia.
Nokia. Let's get it. What's their ticker?
NOK.
NOK.
So I have Nokia on the weekly. So Nokia, I have a few spots for Nokia. The first EMA is around $9. So I would think that'd be support. I think it'd be a weak support. And then my next area of interest is $7.50. Let me see if I can. So yeah, $7.50. If you look back here, this is in 2014. So there's a lot of price consolidation right here from 2013 until 2015.
Ugh.
So 2 years. So that's why I have 750 as a support. Then my last support is $6. That's all the way down to the 200 EMA on the weekly. I don't know if it's gonna get down that far. I mean, it did move up pretty fast, so I wouldn't be surprised. and that would be or almost 40% drop down from where it's at right now.
Mm.
And it's already down probably about 40%. So
Well,
yeah,
Nokia and BlackBerry, had something in common. 2007 became the year of their impending doom when that first smartphone, that iPhone came out. Good God. No, BlackBerry lost, started to lose, not right away, but they started to lose all kinds of contracts with the federal government, and Apple got them. Nokia, the same thing. So they have taken a beating in that department.
yeah. Also, note two, Intel. I will look out on Intel. It's coming down right now because, of course, it's coming down. It ran up. It ran up to like what 140 almost.
Yeah, yeah.
It's below $100 now. But Apple is back investing into Intel and asking Intel to build chips for them again because Intel used to build chips for Apple back in the day. So I will look out for Intel to be a good play, good
Okay.
long term position.
Sounds good, my man. All right. Well, thank you for your sage like wisdom and your deep dives and breakdowns of these companies and the stock itself. Look, folks, he told me I think it was last week that I actually am a trader in a financial sense. I just do leaps all the time. So usually looking 6 months out or more on. Okay, let's close this one on options. Either a call or put, a call, a bet that, or a prediction that the stock is going to go up from where you buy it, and a put is going to go down from where you buy it. So I do that. I just do 2 years on them. All right. But thank you, WhyInvest, as always, coming through and sharing that wisdom. Okay. So the moment we've all been waiting for. So I asked AI to break this down. Now, Robinhood launched this about almost 3 weeks ago, but we're going to talk about this now. I've been meaning to talk about it for 2 weeks. So they launched this "The World is Flat" campaign. And when you hear it, you're kind of like, what's going on here, right? Am I sharing my screen? Yes, I am. When you hear this, you're like, the world's not flat. We've been over this, but they have a whole they have a whole method to their madness, right? So let's just read this. Robinhood accelerates global expansion with Robinhood Chain Mene, stock tokens, agentic trading, and new suite DeFi products. So if you're not familiar with all of that, it sounds like a bunch of gobbledygook. That's fine. Stay tuned. The one I've heard them talk about the most is probably the agentic trading. So where they have AI basically acting as a trading agent or stockbroker and helping you with the best prices. Were you trying to say something, WhyInvest? Oh, probably not. All right. So yeah, so and the tokenization. I've heard them talk about that only a lot. Every single uh earnings call, they talk about tokenization, and it's always Vladimir uh Tenev. Vlad Tenev is the CEO. This darn monitor's telling me it's going to turn off in 5 minutes. Thou shalt not, King James Version. All right, so from London, Robinhood unveils new plans to expand global ownership through an extensive suite of decentralized finance and agentic products. What does that mean? Let's read this. So they broadcast the world is flat. Let me see if something, does a video come up? Nope, same thing. All right. So I ask AI to break this down. Y'all can read on the left hand side. I'll scroll it every once in a while, but let's hear what AI has to say on this. So DeFi and blockchain launches. Robinhood Chain Public Money launching a layer 2 blockchain built on Arbitrum uh, platform tailored for institutional standards, real world assets, and AI native development. Day one partners include Uniswap and Pleads. So I did hear them say it's either Pleads or Pleiades and Uniswap. I heard them talk about that. I'm actually not too savvy on that first one. I can't break that down for you. I have no idea what that actually means. Stock tokens, I've looked this one up, and they're doing stock tokens all over the country, so all over the world. So eligible users in over 120 countries now, which that's big because if you look it up, I think there's a total of 196 or 198, something around there, countries in the world. So if they have eligible users in over 120 countries, let's just say 121, it says over, they have the majority of countries eligible for this tokenization. Can now trade tokenized debt securities 24/7 directly on Robinhood chain via decentralized exchanges, allowing assets to be deployed into lending pools or used as collateral. So if you never heard of collateral, like let's say you needed $10,000, a $10,000 loan, and you didn't have any capital, so you didn't have the $10,000 in your bank account. What you could do is drive your 2020 Honda Civic up to the bank, and they could look at your car and look at the black book value from the dealership or Kelly's Blue Book or whatever, um, and say, okay, your car is worth about 15,000 still, or 17,000. I don't know. So let's say 17,000 still. What we'll do is we'll put a lien against your car. You paid it off. It's 6 years later. You just paid it off. We'll put a $10,000 lien against your car. And so we'll give you the 10 grand, use it for whatever you need it for, but then you'll make payments back to us for the 10 grand. If you default, we come get your car. That's how that works. So that's what they're talking about, collateral. So your car then becomes the collateral you put up for the money that you want lent to you. Robinhood Earn, a decentralized lending product rolling out eligible US users via the main app, offering an estimated 7% on dollar backed USDG through the Morpho protocol with insurance backing against smart contract exploits. I'm going to need them to break this down to me. Decentralized lending. I'm not, I'm going to have to look this up and give you guys a better breakdown of this next week. But I can say, like as far as crypto goes, a lot of that crypto is actually decentralized, meaning that um, it's not regulated by the SEC as much as public companies are, and also they actually have no structure. You don't have a CEO, a chief executive officer. You don't have a CFO, a chief financial officer, a CTO, a chief technology officer, C-suite executives. You don't have a chain of command, so to speak, up and down. So it's just floating out there in the ether, right? So decentralization, I'm used to it in terms of that, but what they're talking about here, I'm not. On-chain perpetuals, eligible users can trade perpetual futures, meaning endless futures, on the decentralized exchange, Lighter, that's the name, natively within the Robinhood wallet. Um, Advanced trading and futures updates. So we're adding commodities like in Europe, uh, being able to trade ETFs, FX perpetual futures such as gold, QQQ, in Europe and US dollar with up to 10 times leverage for European investors. So I think what they're saying here, leverage, they will let them borrow on margin up to 10 times what they're leveraging. So if you want to invest in something at $1,000, they'll lend you $10,000. So you can invest a total of 11 grand. Maker taker fees, including a new fee structure for eligible U.S. crypto traders, with maker fees dropping as low as 0% based on trading volume. So if you trade, so how that's probably gonna be is if you usually there's a transaction fee on every transaction you make. So maker taker fees, I can't say one way or another, but one thing I could probably say, it says based on trading volume. So if you make a lot of trades, um, they'll probably drop your trading percentage to zero because they're making a lot of transaction fees on you. So with the maker fees, they'll probably drop them to zero. But if you don't make as many trades, they'll probably keep you with some transaction fees. I don't know. I can't see it working any other kind of way. Now, global expansion here, they're talking about Canada launching crypto trading for Canadian residents following Robinhood's acquisition of WonderFi, including zero trading fees until September 30th. Look at that. That's what I was just talking about. Fees. The UK planning on an upcoming launch of crypto trading to establish an all in one investing platform for UK traders. That's big too, because what y'all may not know, if you're watching this live on Discord, or if you never traveled to a different country and you're watching the replay on YouTube, other countries are locked out of certain markets, right? So they can't trade crypto in certain countries. Even in the US, if you were in Hawaii during 2020, the crypto had a crazy boom. And I was telling one of my buddies to get in, and he was saying he could not do it because it kept saying it wasn't available. And that's because he was in Hawaii. So he would have had to get like a VPN and set his VPN somewhere in the States, Switzerland, wherever it's allowed, and say, hey, I'm really over here. My signal is coming from Oklahoma or something. And then he could trade crypto, right? But other than that, if you just try it with your regular IP address, couldn't do it. Um, and that's things that people who haven't traveled really don't know. You can't get everything everywhere. So God bless America, right? Because when I went to Oman, say again? You said something? Okay. So when I went to Oman back in 2013, you couldn't even get on uh, Facebook. You couldn't get on Facebook. You couldn't get on, was YouTube blocked? I think we got on YouTube, but Facebook was blocked. So in certain countries, IG might be blocked, all that kind of social media stuff, because they don't like it. They consider it garbage or trash or whatever. They'll have it blocked. Hey, WhyInvest, your mic is still hot. Um, So yeah, so that's that. Now Singapore securing from MAS, paving the way for future. Oh wait. Securing a capital market servicing license from MAS, paving the way for future brokerage services. Again, they may not have this available in Singapore. Thanks, bro. Appreciate it. AI integration. Agentic accounts for crypto, preparing to launch automated AI driven crypto trading tools for eligible US users, allowing them to connect third party AI models to Robinhood data and execute automated trading strategies within human defined safety guard rails. Again, we talked about this agentic AI before, trading bots and all that kind of stuff. Listen, Robinhood is the move. Okay. The MVP of my portfolio is Robinhood. Life is good when you invest with Hood. You could say it a million different ways, but Robinhood is going places. They're taking market share from other companies. They are innovating faster than anybody out there that I have seen. And they can't sue me because I said then I have seen. They can't tell me what I saw. But the thing is, the world is not really flat. They don't really believe that. But I remember I saw a bunch of these little shorts coming out, and Vlad was in like this emperor, like kind of robes and shirts and coats and stuff. And he was saying when anybody did anything super great in this world, they kind of seem a bit off to everybody else, you know, and they make bold claims and stuff like that. So coming and saying the world is flat, you automatically want to click on it because people know what Robinhood is. So you're like, they can't be that crazy over there. And then when you click it and you start reading about what they're actually talking about, oh shoot, it's just a crazy title. I guess you could call it clickbait in a sense, is how I kind of look at it. But Robinhood is doing some amazing stuff. And you better believe I'm about to cover their earnings call. In fact, let me see. When is Hood going hot on earnings? You better believe I'm gonna cover their earnings call. I cover the earnings call, the annual meeting, and they have one other meeting, I think, the summit or something like that. Yeah, the annual meeting was June 2nd. I don't see earnings coming up for them yet. So whenever they go to announce earnings, I'm going to cover that. But hey, guys, that's the show this week. Thank you for tuning in. I appreciate you. I love you. The forge is going cold. That's all I got for you today. But listen, in summary, right? We reacted to John Hope Bryant. So if you got to this part and you hadn't seen the rest, we reacted to a video of John Hope Bryant saying that history is being made right now. It just seems like, oh, it's another Tuesday. It's Saturday, but it's another Tuesday. But history is actually being made today, right? So whereas it's just a Tuesday kind of mindset, somebody else is doing something great. Get out there and do something great. We reacted to Humphrey talking about overspending, inflation, and opportunity is the reason why you shouldn't have a whole bunch of money just sitting in your bank account. We did the health tip of the week: add more green vegetables and fruits to your more variety of colorful produce. And then we talked about WhyInvest, broke down a couple of different stocks: IBM, BlackBerry, Nokia, and Intel. And then we covered the world is flat. What more can you ask for? The Blacksmith is giving you pound for pound value. What else can I call it? Value. That's what you get here. I blanked out for a second, man. When you get behind the camera, you tell me how easy you think it is. But the forge is going cold. I appreciate you. I love you. I'll see you here next week, 10 a.m. Pacific Standard Time. Thank you. And I am signing off.